Welcome back for another top-notch video. This week, guys, we'll be looking at the week of the 6th of January through the 9th of January. Top-notch is ahead of markets, almost all ahead of all equity funds for the TSP, so keep that in mind. We are up for the year, doing very well for this year. If you are interested in this channel, we talk about the TSP, Roth IRAs, retirement accounts, and some of the markets and how they move. You guys are welcome to tune in every week. We do weekly videos. Some of the funds that we follow, if you are in the TSP retirement system, the C, S, I, and F funds. If you are doing Roth IRA or in 401ks and you have similar funds to the ETFs IVV, VXF, EFA, and AGG, these funds kind of equal each other, so we look at both of them at the same time. The C fund / IVV is the S&P 500. S fund or VXF is the small caps. I fund or EFA is international markets, and the F fund or AGG is bonds. If you have any questions, go ahead and write those in the comments below. We always do a general overview, kind of look at some of our funds in a more technical analysis, and then finally we show you where our funds are allocated. So let's dig right into it for this week, guys. When we were looking at the TSP / EFAs / basically the ETFs, we saw that we had a positive week with some of our equity funds. The C fund or the S&P 500 and small caps or the S fund were up, while the international markets and the F fund or bonds were down. So overall, not a bad week. We were in equity funds, so that was a good place to have our cash flow. And so far for the year, we have gained almost 1% for the C fund and 0.5% for some of these other funds. And good news, guys, the Top Notch channel is doing very well. We are outperforming the SI and F fund. We're a little bit behind the C fund. I'll pull up my percentage here. As you can see, for the year, we are at 94%, almost a whole percentage point there, and that is beating out the SI and F fund. So we're doing very, very well there. Just closely following that C fund. Hopefully when we get a little bit of our S pricing back, we can catch up to that and possibly beat that. So we're doing very well there. On a chart perspective with those funds, here's what we saw for the week. As you can see, the C and S fund or the S&P 500 and small caps were outperforming our other funds for the week. So doing very well there. Go into a little commentary here with TSP Talk. TSP Talk is a website that basically goes through the stock prices. If you're interested, you can go ahead and check them out. They do a great job with the TSP. Overall, just a very technical analysis. We've been following these trend lines for quite some time here in October. A guy named Tom does these charts, so we thank him very much for having these up here. And for the S&P 500 or the C fund, really following this chart here, as you can see, this middle line here, have been just kind of cruising in the middle of that, just gone up and up and up ever since October. So very good there. We see this black line or our PMO line starting to get close to our moving average line. But overall, it looks like it might take off again here, guys. So just keep that in mind. The S fund is still climbing. He put an additional line in here, but overall, I like to see this moving average upward sloping. So we're doing very well there. We'll have to wait and see where these trend lines go from here. Looks like it has more room to run, but we'll have to wait and see on that. The I fund is also doing very well, upward sloping 200 moving day average, so very positive there. Good things there, way above our moving averages and within our trend boundaries there, so no issues or concerns. And of course, AGG is above that 50-day moving average. It's been holding since mid-November, so that's good. We have this trend line here, waiting to see if this will kick up or not. We'll look in our technical analysis for that. So that's our overall just kind of general overview of our charts. One thing I want to go over now is a more technical, in-depth review of each one of our funds. The first thing we like to look at is IYY. That's a general market fund. Overall, in this channel, we like to see what all market participants are doing. That kind of gives us a better picture on the technical page when we look at our indices. So IYY is the first thing we look at. It is pretty much all stocks included. As you can see, we are above all our moving averages here. Our 200-day is sloped up. We are above our trend lines here on the website we're using, which is the FinViz. Okay, things are very, very good here. No issues, concerns. If we look on a technical from a long-term basis, we are starting to see the derivative oscillator drop just a tad bit here. This is the third week it's dropped. Usually want to stay out of equities when this is dropping, especially out of our stock funds. So we did pull a little bit out of our our normal brokerage accounts, but our TSP and retirement accounts are still invested in equities for right now. On a midterm basis, you can see that we are starting to drop as well, so that is definitely a warning sign when we have the long-term chart, midterm chart, and if we look at the small-term chart, all starting to drop on us. All three charts are dropping for IYY, so we want to be very careful with our equity funds and how we're allocated for the year. As far as TSP goes, we have one move left for the year. We don't like to make that before the 15th just in case things do change around, but we might end up making that move just this next week, so please keep an eye on our Facebook page or Twitter account. We do make those moves via Twitter and Facebook, so you guys can have those. Moving into the C fund, or IVV, the S&P 500 fund, as you can see, kind of like IYY, the fund is way up there, you guys. We have this moving average that's about to cross our trend line. Really positive there. We just don't want to see this fall, but I honestly think this could only fall pretty much down to this line here. Maybe I'm not really sure where it could go, but overall this has been a great move since October. Really have just exploded up ever since beginning of October. On a technical analysis for IVV, we are looking at a long-term basis, same as IYY general market fund, very similar on its derivative oscillator, which is moving down just a tad bit. Usually when we see the derivative oscillator move down, we see price move down, so this is price up here. But so far we haven't seen that just yet, so maybe this next week or the week to come. As always, we can't predict the future. We just look at what we have in hand and try to make analysis and decisions based off of that. Overall, our PPO line, though, is way above our price percentage oscillator, is way above our moving average, so that's another positive sign. Usually when they cross, we see a increase in price as well. So IVV seems to be doing very well on a long-term basis. On a mid-term basis, we're kind of mixed. It is kind of falling a little bit, so keep that in mind. The last time we fell, we didn't really see anything happen with price. It continued to move up for a long period of time. We only really had 4 down days total, and then it continued to move up. And then on a short-term basis, we are starting to fall back again. So that PPO line is coming closer to our moving average, and our derivative oscillator is starting to fall again. So kind of a short spurt here. We'll have to wait and see what happens from there. As you can see on these last ones, they didn't last very long before it picked up again. So very interesting there. Again, we might end up making a move towards the beginning of the week with this fund. Moving on to VXF, or small caps, a little more risky than the S&P 500. This is the S fund, like I mentioned. This fund here has had a lot of ups and downs towards the beginning of 2020, and then kicked off to stay above the moving averages here. Moving average, the 20-day is just very extended here for sure. And then our 200-day is up, so we're doing very well here. Trend lines are moving up. This is a really big move here. We'd like to see some consolidation here off of this giant move, but we are way above these lines here in August and May that it came back from. So starting off at a very good pace for the new year. On a technical analysis for our long-term charts for VXF, or the S fund, we are in its 3rd week decline for the derivative oscillator. We went from 5.91 since a little bit before the beginning of the year to 5.37 to 4.84. So we are falling quite a bit there. That price percentage oscillator is staying above. Haven't really seen charts turn over just yet. Could see some consolidation here for this gain. As you can see, gain here and then consolidation when the oscillators fall just a tad bit. It's a good indicator of moves, but we're not going to get out of this just yet until we see something like this, or you might see a move this week. We'll have to wait and see. So that's the long-term chart. Mid-term chart, we are starting on the decline. Our PPO is below there, so that's something significant, and our chart is moving down. And then finally on our 4-hour chart, or our small-term basis for VXF, the chart is almost crossed here, and big kind of indecision day. We could see some movement down for VXF in the future. So just keep that in mind moving forward for our equity funds. Our last equity funds is EFA, or the I fund, International Markets. As you can see, it's been staying along this 20-day moving average for a long period of time for most of December, and now moving on into 2020. Yet to be seen if we can break this trend line on the top here. This line here is pretty significant. As you can see it back here in May, it hit that, went right through it in October, then we touched it back in beginning of December before it took off again. But I like to see this upward sloping 200-day moving average. That is very positive. That's great. And we'll have to see where this goes. On a technical basis, long-term chart, EFA or the iFund international markets, we are been in a decline for a very long period of time. So this is where we would like to exercise caution. We don't want to get in this fund just yet, just because we don't know where that could go. That's been declining for quite some time, and price has not been reacting to that. So that's very interesting. Usually when the derivative oscillator declines, we see a price decline. We have just not seen that yet, but maybe once this price percentage oscillator, once this blue line crosses the red line, usually when that happens, we tend to see price drop as well. So we'll have to wait and see what happens with this fund, but I would just be cautious at this time to avoid EFA. On this channel, it amazes me that we've always kind of avoided EFA. We want to use EFA more in the future, but for right now, we'll just stray away from that for right now. On a midterm basis for this fund, as you can see, the PPO line crossed with this line just kind of right below that line. A lot of indecision here, not a lot of price movement. So that's has been the case here. And then our derivative oscillator did drop this past week, so in the negative on a midterm basis. And then on a short-term basis for EFA, the line did never cross. PPO never crossed for this month, and it's headed back down. So just want to avoid this fund, like I mentioned before. Not a really a good fund to get into for the time being. And as you can see, since back here in December, it's kind of just not done a lot. It's just kind of been very stagnant for the most part. Moving on to bonds or AGG. With bonds or AGG, we see a large bullish flag here. As you can see, this line's coming down, this line's coming up. Did break to the upside here. Hoping to see that rise. That 200-day moving average is moving way up here. We are above our trend lines. Things are going well. Would like to see this break out to maybe to the top here again to 114. Might be a good fund to be getting into this next week with our one move in TSP. Again, AGG is the F fund for the TSP. On a technical analysis for this fund, as you can see from a long-term basis, this oscillator has been coming out for a very long time. Waiting to see. We did jump in that in December, hoping it would move, and it really didn't move all that much. Stayed very the same pretty much, but now that the PPO line is starting to get close, if we see a cross here, could see price really start to react positively here. Hoping to see some more action on a long-term basis for AGG. On a midterm basis, we did just have a cross here, so that's very positive. A lot of indecision with the price up here. As you can see, when we have a tail on the top and bottom, that means investors are indecisive of where price should go in the future. But with this PPO line and a positive oscillator, really hoping to see a good move forward with the F fund. And then on a short-term basis, we did just cross here with the F fund. Hoping to see more positive movement as we move forward for AGG. Overall, that's all our funds, guys. We went through everything for the TSP and the Roth IRA and brokerage funds. So that was great. Happy that we're above markets for the year. So I'm just impressed that we can stay with markets. That's always our goal and desire. One of the things that I found out for this week that I'm going to play for you guys, if you are interested, is I'm going to go through this some YouTube channel of the CiovaccoCapital channel. It's one of the channels we follow. It's a good channel to look at for what's just the way they look at technical analysis. I give full credit to their YouTube channel and for what they do there. I'm just going to go through a little bit of their video to kind of say what they see and explain that, and maybe fast forward through a few pieces and just kind of show where we were at versus where a professional fund was managed for the entire year. So I'm going to go right into that.
Plan is to incrementally add to our equity exposure as the data improves, and that's exactly what we did. Given that on December 24th, 2018, we had no exposure to the stock market, and given that we respected this still vulnerable look here.
So this time last year, we were doing about the same thing, doing some analysis, seeing where the stuff was at. Very concerned last year, but we got into equities a lot quicker than CiovaccoCapital did.
January 10th, 2019, we're very, very pleased with our full-year returns.
So this is the full year returns for the CiovaccoCapital channel. Very interesting. They are a professionally managed fund, so you got to have over $500,000 basically to be managed by this company. And they ended up getting about 16%, 16 and a little more than 16% for the average gain for the year. Very interesting because in our account, the TSP, which I just do a free YouTube channel for 2019, we ended up outperforming them. We were at 17%, so we were a little bit above them for the year. So I'm pretty proud of that. And as they go on to mention, they like to do, you can do a buy and hold strategy, but with that you could come up with some serious declines. I'll play a little bit more of their stuff and what they mean by that. But having this managed fund, yes, you won't get the full effect of those great years, but you won't get the full effect of the negative years either. Overall performing, I mean, I'd still take 16 or 17% versus a decline, and they're going to go ahead and show that. Let's see if I can find that.
Roughly 16.37%. This is the average gain for all accounts that were with us for the full year. The median gain looks very, very similar at 16.34%. We just showed what can happen if you never manage risk. Every single
So that's the biggest thing we try to do on the Top Notch channel is manage risk. We do the same thing these guys do a technical analysis and try to manage risk. As you can see with this chart here, there are a number of declines that they have here. Each one of these lines represents a decline all the way up to basically 89%. That was a pretty terrible year way back towards the Great Depression. So with managing risk, we can manage some of these levels, and yeah, if the S&P dropped this, it would be very significant.
One of these lines represents a real-world decline, something that happened before. Thus, when we look at these figures, it's logical to ask, how do these results compare to other firms that also manage downside risk? Bridgewater has some of the brightest minds on Wall Street and is largely considered to be the most successful hedge fund of all time.
So Bridgewater does management as well. They're just like this channel. Very interesting. They have nearly $118 billion under management. So they have quite a bit of people that trust Bridgewater and go through Bridgewater. And I was kind of shocked by the returns for last year.
How did Bridgewater do relative to these numbers for full year 2019? Their pure alpha fund was down 0.5%.
So for the year, they did not outperform the S&P 500, did not outperform Ciovacco, and did not outperform Top Notch channel. So we did very well compared to these guys. Very happy with the analysis and what we do. If you guys are interested in seeing our analysis every week, you can go ahead and like, subscribe, or share. Kind of just wanted to show that to you guys moving forward. And the only other thing I wanted to show you was some of these declines. So they kind of make the argument, if you are a buy and hold, it only works if you hold 100% of the time. So if you're not holding 100% of the time, if you get out when things are bad, you can end up really losing a big part of your portfolio. So that's why we do managed accounts here. So I'm just going to show this real quick.
So if this return here looks very, very appealing.
That was the S&P 500 gain for buy and holders for 2019.
To you. Then you also have to accept that you would hold through this little slideshow here.
So basically what this is showing is if you were to have $1 million in your account, you would buy and hold, and you would stay the course through some of these periods here: 1946, 1987, 1968, 1916, 1901. You'd almost lose half your portfolio. So these are why Top Notch really likes to manage the portfolio and just not buy and hold. We find that significant, and as you can see really where these lines are. Look at that. 1929 was a really terrible year. Your $1 million account would have gone down to $108,000. So, and again, guys, it's not a matter of if when these situations happen, it's a when they'll happen. The market's always going to go up and down. There always is going to be volatility, and we just like to try and mitigate some of the risk or some of the volatility, and stay when there is volatility to respect, as it says on this channel, maintain the course, and when there's volatility to basically get out of, we get out of it, because we don't want something like 1929 happening to our portfolio. Again, this is the Ciovacco channel. YouTube thing, you guys are welcome to subscribe to them. They do some great work. I give them full credit for all these charts and for everything they do. I just wanted to show you guys why Top Notch manages their channel. And yes, we might not outperform the funds every year, but my funds are managed, which are great. I like managing it. So, and it just prevents so much loss sometimes. It can prevent stuff like this case here. So that being said, I feel like that was a pretty good presentation of what we did for the year. We felt like we did pretty well for managing our funds. We even beat this channel out. And we beat that Bridgewater folks out. So we did very well for Top Notch. Felt really good about what we got for 2019. Didn't make what the buy and holders do, but again, the buy and holders would also take one of these hits if we were ever to have one of these hits, which is not an if, it's when it happens. So that being said, let's get into our allocation for the week and where we're sitting at. So right now we are sitting 50% in the C fund or S&P 500 and 50% in the S fund or small caps. That's respectively ETFs, IVV, and VXF. So we are sitting right there. We're probably anticipating a move this week, short-term move, since markets are just headed down for the time being. We'll have to wait and see where things go from there. Really appreciate you guys watching. Please like, subscribe, or share. Always like your guys' comments. Thanks again. That's another top-notch video. We'll see you guys next time.